Regulation. How will it affect crypto? The cryptocurrency world is rapidly changing. As more individuals invest in cryptocurrency, authorities worldwide are taking note. With that focus comes regulation. But what does regulation imply for cryptocurrency? Will it suffocate innovation? Will it, on the other hand, serve to validate the business and make it easier to find mainstream investors? In this video, we'll look at regulation. How will it affect crypto? We'll discuss both the possible advantages and hazards of regulation. We'll also look at how regulation could affect the future of cryptocurrency. So, whether you're a crypto investor or simply interested in the future of this technology, this video is for you. Since its inception, Bitcoin has been hailed for its promise as well as chastised for its lack of regulation. Some feel that regulation would help to legitimize cryptocurrencies and attract more mainstream investors, whilst others fear that it will impede innovation. Governments have adopted a range of ways to regulate cryptocurrencies thus far, and it remains uncertain which strategy will be the most effective. Many individuals were drawn to Bitcoin in its early days because it was perceived as an unregulated Wild West. However, as money has grown in popularity, governments have begun to take note and ponder how to effectively control it. Some nations have explicitly banned cryptocurrency exchanges, such as China, while others have been friendlier. Japan, for example, has legalized Bitcoin and enacted laws to safeguard investors. The United States has taken a more fragmented approach to regulation, with several agencies having opposing positions. The SEC has taken action against several ICOs that it believes violate securities rules, while the CFTC has permitted Bitcoin futures trading. It's uncertain how the US will handle regulation in the long run, but the government is interested in Bitcoin. Cryptocurrency legislation is still in its infancy, and it is difficult to anticipate how it will evolve. However, regulation will have a significant influence on cryptocurrency's future. Investors should keep a close eye on changes in this sector since they will almost certainly have a big influence on the value of their assets. What effect will regulation have on cryptocurrencies? A more secure cryptocurrency ecosystem. The SEC has started cracking down on ICOs and cryptocurrency exchanges, and this trend is expected to continue. This is fantastic news for investors since it will result in a more regulated and secure investment environment. It remains to be seen, however, how this may affect the price of cryptocurrencies. The acts of the SEC are intended to safeguard investors from fraud and to guarantee that corporations follow securities regulations. There have been several cases of fraud in the crypto sector in the past, and the SEC is striving to put an end to this. The SEC has already taken down many ICOs and exchanges, and it seems probable that more will follow. This makes it more difficult for consumers to invest in cryptocurrencies, but it also makes the market more stable. Market stability increased. The SEC has clarified its stance on cryptocurrencies, concluding that digital assets like Bitcoin are not securities. This move has relieved investors, as it eliminates the potential for crypto to be highly regulated like other securities. The SEC has accused two individuals of conducting a bogus crypto lending operation, promising yearly returns of up to 45% but using investor cash to cover expenses and make Ponzi-like payouts. This action demonstrates the SEC's active involvement in regulating the crypto lending industry, which will help stabilize the market and increase investor confidence in cryptocurrency. Clear laws and regulations will lead to more capital entering the industry, promoting innovation and growth. Boost investor safety and confidence. What impact will the SEC's regulation of Bitcoin exchanges and other platforms have on investors? The SEC's move to regulate cryptocurrency exchanges and other platforms is a step in the right direction for investor protection. In doing so, the SEC is bringing more transparency and structure to a sector that has hitherto been famously opaque. This will boost investor trust in the area while also providing more security against fraud and other unwanted conduct. Furthermore, the SEC's move to mandate cryptocurrency exchange registration will assist to level the playing field between these exchanges and regular securities exchanges. This will allow investors to compare apples to apples when deciding where to put their money. Overall, the SEC's regulation of cryptocurrency exchanges and other platforms is a positive step for the sector, as it will boost investor protection and trust. Stablecoins may be scrutinized more closely. One of the most talked about phenomena in the cryptocurrency sector over the last year has been the growth of stablecoins. These digital assets are intended to provide all of the benefits of cryptocurrencies while avoiding the volatility that has become synonymous with Bitcoin and other big coins. The value of a stablecoin is pegged to another asset, often a fiat currency such as the US dollar, to provide this stability. Tether, the market's most popular stablecoin, is tied to the dollar 1-to-1. While stablecoins have proven to be extremely popular among investors and traders seeking a method to hedge against volatility, they have also drawn more scrutiny from authorities. One of the main worries that authorities have about stablecoins is how they are governed and controlled. Because stablecoins are intended to have a continuous value, supply is frequently tightly controlled. This contrasts with typical fiat currencies, which are administered by central banks with the ability to issue additional money as needed. The SEC's move to regulate cryptocurrency exchanges and other platforms is a step in the right direction for investor protection. In doing so, the SEC is bringing more transparency and structure to a sector that has hitherto been famously opaque. This will boost investor trust in the area while also providing more security against fraud and other unwanted conduct. Furthermore, the SEC's move to mandate cryptocurrency exchange registration will assist to level the playing field between these exchanges and regular securities exchanges. This will allow investors to compare apples to apples when deciding where to put their money. Overall, the SEC's regulation of cryptocurrency exchanges and other platforms is a positive step for the sector, as it will boost investor protection and trust. That concludes our video on regulation and how it will affect cryptocurrency. We hope you found it useful. Regulation, as previously said, has both possible advantages and hazards. Only time will tell how regulation will affect the future of cryptocurrency. But one thing is certain, regulation is on the way. As a result, it is critical to be prepared. If you enjoyed this video and want to know more interesting facts like this, stay tuned. For that, don't forget to subscribe to our channel, like, comment, and share our videos.